Hello ICT traders, welcome back to the channel, and in today's video we'll be going through everything you need to know about top-down analysis. Now top-down analysis is something that every single trader should learn to do without any exception, whether you are a beginner trader or an advanced trader. Why? It is simply because that is what gives you an edge in the market. By the time you do your top-down analysis, you will actually minimize the kind of wrong trades you'll be taking because you know exactly what is the bias of the market. And I will be willing to help you to understand what a top-down analysis is. I'll be going through it right here, step by step, in detail, so that every single one of you would be able to do it on his own. So let's get into it. Now, before you know what a top-down analysis is, or before you can do top-down analysis properly, you need to also understand how time frame works, because time frame is also a very key component of top-down analysis. Now, a lot of you people, when you come to your chart, you fail to understand how time frame operates, and then you end up having a wrong directional bias. All right, so when you come to your chart, especially on TradingView, now when you come over here, you will actually see different time frames, and each of these time frame is important. You know how to operate in it. Now, by the time you're taking a swing trade or you're taking a positional trade, you will not be looking at a lower time frame, such as the 1 hour time frame, the 15-minute time frame, or even the 5-minute time frame. But if you are trading intraday, that is also important. So for those of you who are trading intraday, or you are trading in a day to just make money and you close before the next day, I would just like you to look at your chart from the daily time frame downward, because it will help you to minimize the confusion. If you are looking at the weekly time frame or the monthly time frame, that may not be really relevant to you. But if you want to be very effective in your analysis, you can use the daily, the 4 hour, the 1 hour, and then downward. All right, so I'll be using the daily time frame as my highest time frame, so I don't care to know what is happening on the weekly or the monthly. All right, so it's important. And another factor that always affects your analysis is definitely the fundamentals. When I say the fundamentals, it's basically what happens when there is a news release. So you may want to stay ahead of the market by checking any of the news update platforms, such as Forex Factory, or you can check investing.com, any of them that you have access to get the news update. For example, if you can see this one on Monday, we have basically there is not so much news on any of the major peers, but then you want to check so you can trade with caution. All right, so on gold now, so coming back here, the first thing you must understand is that every single time frame has its own structure differently. So look at this. I just want you to just look at your chart. From this, what you're looking at it here, what can you deduce? From the look of this chart, you will definitely know that gold has been trading bullish for a while. All right, this is the daily time frame, and you can literally see that price has been bullish for a while. And one of the principles of trading, you should know that price does not go in one direction forever, or it doesn't go like this in a linear way. The growth is actually exponential. It push up, it comes down, push up, it comes down. By the time price pushes up like this is something retail traders call overbought and oversold. So that concept may be important here. So as price was pushing up, look at where price is going to. Do you think price will continue going forward from there? That is the question you should ask for. If this is established, then you would be able to do your market structure. Look at what price have done for the last time. Now, literally from what I saw here, if I pick my line and just put it here and draw a horizontal line, I would see that price have actually broken structure to the upside in that area and literally sweeping liquidity below here before going up. Now, these things are important for you to look at. And then look at this area. There was a bullish order block here that price have traded into. So these details are important on the daily so that you will know what price have done. The last time price has broken structure was here, trading above this area, the liquidity point here, the buy side liquidity here. Do you think price will continue going up after sweeping all the liquidity that was left? And I think gold have traded to its all-time high over the period of the last 2 weeks that we have seen price has been printing this bullish candle. So the next thing to do now is to establish the concept of where is price going to go next. This should always be your question. Now that price have printed these candles to this area, where is it going to go next? Because that will help you a lot. Now from this, you can literally see that if you are doing premium and discount, basically understanding where price is at. If you pick your fib level, put it here from this swing low and bring it to the swing high. This is done every time you want to know where price is currently at. All right. So this Fibonacci tool was set in such a way that we just want to see the fib level divided into 3. Middle of the fib level is called equilibrium point, basically the middle of it, and that's the 50%. You can see 0%, 50%, and 100%. So middle of it is called equilibrium. Anything below the middle is called discount. Anything above the middle is called premium. So when you look at this, you will know where price is at. What premium simply means is that the price is really expensive. This is just like normal business. You have a product that people were buying at a cheaper price, and now it is highly expensive. At this level, definitely a lot of people will be discouraged to buy. So what people normally do is to wait patiently for price to crash down into discount so that people can buy again to go up. So that's basically the concept we are deploying into this. So at this point, it is not wise for us to do the buy. Why? Because it is expensive. So we want to wait for price to kindly go down to discount. And in so doing, we will establish the concept of time frame. Now, this is the daily time frame, which means if we want to see price come back to discount, we want to see, you see, daily candlestick printing. We don't know how many will print to the discount area. It may take 1 week. It may take 2 weeks. It may take 3 weeks. That is where patience comes into. Now, if you are patient enough as a trader, you would be patient to wait for price to come here by printing every daily candle. But then, if you are impatient or somebody like me that likes to trade intraday, I will do something called counter trading. Counter trading is something that everyone does in the market. Yes, everyone does it, depending on the time frame you are trading. So as price will be coming down to discount, the question is, where is the point that price may literally go to? Now, in this discount area, there is a very, very visible fair value gap that I want you to see in the discount area. Can you see this fair value gap? It's one point that price may literally go to. Why am I using that fair value gap? Because this fair value gap has an old high here. So this confluence is highly important for us. You see this one. So if I see price come back here into this fair value gap, I will not be surprised. Why? Because there is an old high here. This is what ICT call unicorn entry. So if you just want to stay behind and wait for price to come back there and be patient, maybe you don't want to engage yourself in so much trading activity, you can just put your position here, wait for price to come, and then the buy will start. But if you are like me, let's go to the lower time frame, the 4-hour time frame now. Now that we know where price is going to, the 4-hour time frame will be very, very important for us. So in the 4-hour time frame now, just look at it. Price has just been pushing. As price was pushing, look at the weakness in the upward movement. Does that sound like there is a weakness in the buyer's strength? After a buy ended, what do you think will start? A sell. That is basically a downtrend. So look at the candlestick here. Indecision candlestick struggles. So we have created price, creating a low here, pushing up, creating another low here. But then this time around, we couldn't even beat the last performance or the last record. So at this point, we could see there is so much weakness. All right. There is so much weakness in the buy side momentum, and the low that price created was here. So from the 4-hour time frame, you could look at this and say, okay, I want to see price literally crashing into this or lower than this area entirely, and then I can say that I am starting the downtrend to go where? That fair value gap on the daily. So this is the foundation of counter trading. So we'll keep counter trading going lower, but then this will take time for it to reach, but the daily time frame is still bullish. But we are not wrong at all. We will do this so that we can reach that place and take the buy again. All right, I hope you're understanding this. I just hope you're understanding it. So let's go into it. From this, we would not be able to see anything in detail. And that is why, if you can be patient, you can wait for this to happen here. Yes, you can wait for this to break lower than this. But if you are somebody like me, I will also go to the 1 hour time frame and look for the structure there. Notice I told you that every single time frame has its own market structure differently. So in the 1 hour time frame, all right, in the 1 hour time frame, look at this price pushed up, creating this low first. Let's say this low. Look at this low first, and then another one here, and then it created another one here. So look at this. On this entire movement, if you were following it, price have actually shifted structure just here. Let's see. Yes, price have shifted structure around that exact point on the 1 hour time frame. So you need to be very, very meticulous for you to be able to see this. Notice what price did after shifting structure here. You can see it was not here, but here, this particular candlestick was the one that shifted the structure. Price quickly went up to this bearish order block and then this bearish mitigation block, and boom, we saw price crashing. So we are currently bearish in this movement, currently bearish in this entire movement. Price came back to retest it again. Boom, the first test was here, crashing again, and now look at what price did. Can you consider this as a bearish mitigation block? This guy, yes, it is a bearish mitigation block. Price came back into it, trading above this guy, this high, just to sweep liquidity, and then it's crashing now. So on Monday, what you expect to see is the clearing of this guy. Once you clear this guy, man, you are in a downtrend on gold. It's as simple and straightforward as that. Why are you doing this? You are counter trading, but you are not just counter trading like somebody that doesn't know what he's doing. You are counter trading because you know what you are doing and you know where price will eventually go to as you are counter trading. So it will be unwise for you to sell here. Why? Because you have not seen price clear this. But once you clear this, you are very good to go into the downtrend, and then you want to see price trade into where the daily time frame fair value gap that I showed you there, the daily time frame fair value gap, and that unicorn entry here. That should be your target. Nothing more, nothing less. It's as simple and straightforward as that. You can go up to the 5-minute time frame and still take trades. All right. So this is the 5-minute time frame. Somebody on the 5-minute time frame would have taken so many trades just by seeing this shifting structure. Let's see. Where is the shifting structure? The shifting structure happened here, and price crashed, crashing. But something like gold, I don't advise you to trade it on the 5-minute time frame or the lower time frame. You can stop at the 15-minute time frame because gold is somehow volatile in the market, and you wouldn't be doing yourself good if you're taking it on the 5-minute time frame. I am speaking from experience. I'm not establishing something different. All right. So guys, this is all about the simplicity of top-down analysis. You need to do this time and again to understand it. Thank you guys for watching. I hope if you have any question, you will let me know in the comments, and a lot of the question is about top-down analysis, definitely, but then I will make more videos explaining it. Thank you. See you next time.